is NDTV and you are watching NDTV Prime.
Salarpuria Sattva, Trust, It's What We Build, presents the Realty Debate with Manisha Natarajan.
Been to a mall recently or even to a high street market like Khan Market in Delhi or Nungambakam in Chennai? Does it feel any less crowded? Well, it did definitely for the first few days post the bombshell announcement of demonetization by the Prime Minister on November 8th. Shoppers did desert all markets. But how about now? Is it that the malls which have emptied the most or mass markets like Karol Bagh, Sarojini Nagar and Linking Road which are feeling the heat? Will all of it get restored soon or just some, and how soon? These are questions which everyone is asking. So welcome to a debate today with experts whose job is to read the tea leaves on Indian retail. What's the price of India's retail sector when it comes to demonetization? Pushpa Bector, Executive Vice President and Head Premium Malls DLF, joins us today, as does Debashish Mukherjee, Partner 80 Carney India, Pankaj Renjan, Managing Director Retail Services JLL India, and also with us in the Delhi studio, Harminder Sahni, Founder and Managing Director of Wazir Advisors. Before I begin with the debate, I think that big number which has come out has shaken everyone. The Nikkei Market Services Purchase Managers Index sank to 46.7 in November from October's 54.5, the first time since June 2015 that the index has gone below that 50 mark. Now, what does this mean? It separates, the 50 mark separates growth from contraction. So it really is indicative of a contraction in November. It also was the biggest one-month drop since November 2008. Just after the collapse of Lehman Brothers triggered the global financial crisis is when we saw a drop such as that big. Composite PMI, which includes both manufacturing and services, also fell to below 50. So on that basis, I think let's just find out what is happening to India's consumption story and how is it really affecting retail. So Pushpa Bector, obviously you come under the scanner first. What are the trends? I mean, in the malls that DLF owns, what has been the pattern from November 8th to today?
Okay, so the first week and the weekend, if I may say, there was a drastic drop of around 25%.
That's it? That's not drastic. People are talking about an 80% contraction. You're saying malls only saw 20 to 25% contraction?
25% footfall drop.
Okay,
footfall drop 25% is huge. However, we saw week on week, and I'm tracking this obviously every day, and we're seeing that every weekend it's actually gone up, and last weekend has been extremely good. We have actually increased the numbers which we tagged on in October, so we actually exceeded those numbers. So I think we are on par as far as footfall is concerned, but as far as sale is concerned, we have had some interesting trends to share.
Okay.
The trend is that if you're a hypermarket player or a supermarket player, you would have loved it because they've actually grown 40% over the last month, because there has been a huge shift. Food and beverage has not really got impacted in malls. Actually, we've had Cyber Hub has revived completely because most of the spends was credit card oriented or debit card oriented. When it came to the other malls, we did notice that it's around a 15% reduction in food.
Okay.
Fashion has seen, the discretionary fashion spend has seen a bit of a dip. But as I said, week on week, there has been a ramp up in sales, and we are coming back to our October numbers now by end of November. So overall impact has been there, over 10% to 15% as far as sales is concerned in November.
All right, Harminder, this seems like Prime Minister's dream come true. There are analysts, there are brokerage houses talking about a 70% drop in India's consumption story, and you have initial numbers of service index all showing huge contractions. So is it really that short term? By end of November, it'll all get restored? The hype is too much?
See, I think I won't say by end of November. When we are looking at the market, I think we need to look at all the segments very, very clearly. That there is a daily consumption, India GDP, even consumption is almost 52% still food and grocery. I don't think anybody was eating less or anything was planning to go without food for even a day. or a meal time just because there was no cash available. So I think everybody is eating. So 52% is intact. Then you come to discretionary, and
so
even
you're saying
within
a little above 50% was F&B.
Absolutely,
and
that's
is intact.
That's intact.
Okay.
And second is that discretionary, and within discretionary also we call it essential discretionary, where you have to buy clothing, you have to buy footwear. You will not suddenly, just because there is no cash available, unless until your income is getting impacted. That's where you'll see it. So in short term, so people may have deferred that for the 5, 10, 15 days when there is no cash and people are trying to settle into this new way of life, then they may not have gone to the mall, but it's only deferred because people will still buy those jackets, they'll still buy those shoes, they'll buy that winter wear, or if they were to attend a wedding, they will still buy that. I think Pushpa's numbers are real numbers. I'm making some assumptions here because I don't have access to that, but they're just confirming that people have come back to buy. The deferred consumption came back in a couple of weeks' time. And the third is discretionary, which people do, or capex. When you are buying electronics, or you are buying cars, or you are buying houses, obviously these things are not bought every day. So if there is no cash available, or there is some kind of a turmoil which is going in the market, again most of the people are not in the market to buy that anyway. Only 2, 3, 5% people are buying in a month electronics or cars. So they will buy it next month. That will also come back for sure. So annualized, if you look at the numbers, I think by 31st March it will be only companies who would have lost market share, would not have grown because of some other reasons. They would like to explain to analysts that they have lost this because there was a demonetization. Otherwise, I find it very difficult that anybody will lose any kind of sales numbers or their margin number just because of this turmoil which has happened in between. And organized sector, if I could complete my comment on this, organized sector is a big gainer even in the short term. And the medium to long term, obviously, they are going to be the biggest gainer in this.
So we're going to come back to
that. So all the malls, etc., where you have these organized retailers and the brands, they are growing faster than they were doing in October.
Fair enough. Debashish, do you buy that? I mean, you had 3 years of FMCG businesses really not seeing so much growth, and everybody was actually asking that question. You have a top line GDP growth of 7% plus, but really it's not translating into bottom lines or revenue growth. Bottom lines were getting okay, we were all right in the third quarter simply because of, let's say better margins and cost optimization. So give me a sense in terms of this whole analyst cutting GDP growth figures, saying India is a consumption story, 1 to 1.5%. Is it an overhype?
No, I don't think it's an overhype. In fact, I think the GDP cut could be deeper. Let me first answer that part of the question. I'll come back to the FMCG companies.
Okay.
As I understand, economists say that right now the economic multiplier in India is around 6. And on an average, if the FMCG companies are losing 20 to 30% of their sales, I mean, you basically should do something like 80% to the power of 6 for a month. I'm not saying it's for the whole year. And that impact for that month is going to be over 50% for the FMCG sector in terms of the money circulation and the multiplier.
Okay.
I mean, of course, FMCG is not all of GDP.
Right.
It is a certain percentage of the consumption. But as Harminder said, it's 50 to 60% of the consumption. So I'm sure the folks who are talking about that 1.5 have done their math. So there is a multiplier effect, though individual companies are seeing a 20 to 30% decrease. I think that's point number one.
Okay.
The GDP number might be significantly different from individual company numbers. The second part, coming to individual companies, I think they're easily in traditional trade seeing 25 to 30% decrease. Of course, it's difficult to generalize the ones in the more staples.
What is traditional trade? That would be your F&B or what?
By traditional trade, I mean
the unorganized sector? Yeah,
to the mom and pops and the unorganized sector and the distributors.
Okay.
So they are seeing, at least if they're on the more discretionary side of food and beverage, if we just stick to that for a moment, they are seeing close to 40% drop as per what the research agencies are saying. And if you're more on the staples, commodities, edible oil, it's about 10 to 15%. Right, that's about 90% of the channel in India. Modern trade is seeing a growth of about 20 to 25%.
That's organized retail.
That's organized retail.
Okay.
And that's a 25% growth, which year to date has been around 4 to 5%. So the important point is that modern retail in the specific 2-week period has grown 5 times that of the annual average. So I mean, you can, anybody can do the maths that for 10% of the business has gone up by 20 to 25%, the remaining 90% has gone down. So for the period under review, and we have to see when the cash notes will come back, etc., what the overall yearly impact is, it's yet to be seen. I think it's
so you're saying that the organized sector is such a small part of the entire India retail story that, organized sector being able to cushion a demonetization impact isn't really what is going to impact your GDP. It's the unorganized sector and the big bleed in it which will really impact the GDP bleed.
Absolutely.
Okay, Pankaj, what's your own summary, your opening comment on how much will organize? Let's come to the mall retail space. All other stocks melted, but Phoenix Mall actually went up because they said, hey, guess what? People are going to end up coming back to malls, if not in the first 2 weeks of November after demonetization, but definitely December. We had the head of Phoenix saying that, we've got literally 100% footfalls coming back. Is that how you see it? Have you studied the impact on malls?
Yeah, so I completely validate what Pushpa said earlier just now, and because I was with a mall developer in Bangalore, in front of the primest mall in Bangalore, and which was significantly the most premium mall, and I would say if there was any effect of demonetization, they would be the most affected. And the mall developer had a detailed analysis which he ran me through. The impact was in the first 2 weeks was about 20-25% straight drop in footfall as well as in terms of sales. But in fact, they've gone up by 6% from the previous month's threshold. So he says that the sales are, the footfall has gone up by 6% and the mall sales was down about 9%. Which he said 9% was on down because of various factors, combination of reasons, and it's very marginal. And he hoped that while speaking to a couple of retailers, he confirmed that that should be also be close to negligible, probably the end of the next week itself or by this weekend. So really, actually, mall sales in all the metro cities really come back. What has got impacted is definitely in tier 2 towns, which are very heavily on cash. And so much so retailers which are operating in cities in cash markets where there is more prevalent of cash than card economy, which is tier 2 towns in North India, state capitals, and also Gujarat to one extent. One big retailer told me last week is that Gujarat, the penetration of card was very, very low, and majority of 50% of their sales was actually coming in through coming through internet as well, because they used to be an entertainment retailer. And he says that that's taken a big hit. So it's really an impact on the tier 2. But they've seen is that the customer is slowly adapting and moving their payment methods and adapting to the market conditions. So consumption slowly has come back.
Debashish, what's your reading for the unorganized segment? Do you think that the pain will go away by March end?
Manisha, I think it all depends on how much cash comes back into the system. We have to realize the malls and the overlap with the spending population, i.e., folks in India who earn more than 7 lakhs per annum is only 3.5 to 4%, right? So we still have to discuss about the balance 96%, and even if you feel some of them had black money, even if it's a huge percentage.
I think, Debashish, those are the ones who actually accepted that they had the money to pay those taxes. There's a lot of money. It's just that it's never come into the system or the taxation system, right?
Yeah, but if you just overlay the convenience factor, to give you an example, 65% of food, packaged food, is at 5 rupee and at 10 rupee price points. 65%.
So yes.
So now the question is how many retailers, even if they adopt all the electronic payment mechanisms or credit card, will actually for 10 rupees or some combinations of there really move there.
Okay. Fair point.
And even from the charts I've seen, global economies have moved to up to 50, 55, sometimes 60% electronic. There's still a good 40, 45%, which is always cash. So combined with where the potential is and how much time it will take for cash to get into the system, I have practically no doubt that the smaller goods, the goods which you buy in your local stores, is going to get hit from an overall macro perspective.
Okay.
I understand the mall story and I don't have a difference of opinion but that's a very small part of India.
Okay. Harminder, sum it up for us in terms of, the impact to the unorganized sector and the benefits that you see to the organized sector.
No, I have always been very, very optimistic on the malls for that matter, because in the last few years there have been various reasons, and now the latest one being this currency swap or demonetization, that malls are the places where Indians go to entertain, go to eat, go to shop. And there are very few, because of online scare became so big that so many people stopped even thinking about creating malls, and many more would have come in, but I think somewhere 3 years ago there was a slowdown on that, and that will impact us in the coming years, that there will not be new malls coming in. So once which are there, they will continue to do very, very well. And with this online thing becoming so big, I know of companies who have 200 stores and they were looking at becoming a 300 store company to grow their revenue by, let's say, 70%. And now the way they are looking at that, do we need to open even one more store? Because all these 200 stores are enough to be the flagships for the brand, and the sale will come from distribution, sale can come from online, and even these stores, same store sale can continue to grow. So there's no correlation in that. So the existing malls which are there, they will definitely continue to become more and more premium. So they will have huge advantage on that front. And coming to the other part, between organized and unorganized, if you ask me, see, this part, even in terms of currency going away and now coming back, when we talk about the smaller packs and the smaller transactions, that currency never went away. Nobody was using 500 to buy a 10 rupee or 20 rupee pack. So our teams have gone out and tried to collect this data, that are the Kirana stores or the smaller restaurants, they are losing sales, or a samosa wala is losing sales just because there is no currency available. None of them. None of them. They all said that, and not that they were taking money from Paytm. They said that anyway we were not dealing in the big notes in tier 2 and tier 3 towns. He will never even give a change for 500 rupees. He'll insist that give me 100 and then I'll give you the change. So the economy was running on 150, 20, 5 and 10. So there was no impact seen on that part. But when it comes to the organized players, again, most of these people who are in smaller town, like I said, there is an essential discretionary which is deferred. So these people, they react very, very quickly. Anything happens. Something happens in Tamil Nadu, people in Punjab in tier 2, 3 also will slow down their shopping. Because they'll say there's something going wrong, right? But it's all deferred. But in metros, most of the people don't defer these things. Even things are happening in south of Bangalore, people in North Bangalore are not impacted. They will continue with their shopping. So it's only a timeline on which the spectrum, if you spread it, eventually it all adds up to the same. Tamil Nadu Chennai had floods. And I have seen the numbers of companies who at that point of time saying that, oh, we are going to be hugely impacted with this week or 10 days of floods. But I went down and really looked at the number at a regional level. There was no city level numbers were not available for listed company. They hardly any impact. They have grown the same way they have been going for.
What I'm hearing is then that really it is a very short-term impact to India's consumption story, and there's really no reason to worry so much. Pankaj, would you agree with that? I mean, let's step out of the mall space or organized retail. I mean, we're trying to judge here the consumption story per se. If we are saying that the smaller ticket sizes of 5 rupees, 10 rupees, they were anyway not dependent on the 500 and 2000 rupee note, then you have organized malls which are going to be okay. In between, the spectrum which has got affected, as Devashish has laid out the numbers for us, will restore as soon as the currency starts coming back into the market. Are you confident that March is probably the end of the bleed for India's consumption story?
Absolutely. I'll just give a small cue. There is this movie which got released, which is a very urban, called Dear Zindagi, and it's a very urban kind of a movie. It's already done collections of 50 crores. So where is the consumption going? It's there. You go to tier 2 and tier 3 towns, they're entertainment starved. And as Harminder said, the fact of the matter is malls is the way to go, for example, if you look at it. So whether it's unorganized or organized trade, the consumption is very much there. People will consume. It's because of certain psychological factors which affect the consumer in a certain way. And he starts deferring some of his decisions. They probably defer the decision by a quarter or 2 quarters. But the decision to consume is not gone away because the impact of earning is not gone. We're not talking about job cuts. We're not talking about salaries getting deferred. People are still getting their salaries. It's only they're not able to withdraw the salary to consume.
Pushpa, before we wrap up, now we've all pretty much agreed to the fact that luxury, discretionary spend is going to get affected, jewelry. So I'm not going to discuss jewelry here at all. I mean, jewelers themselves have turned around and said our business is dead. I mean, it's going to take years for it to revive. That was a very, very big cash business. Let's just look at luxury and a DLF Emporia sort of a mall. I mean, honestly, that will face the brunt, right? What will the luxury guys? India was a very big growth story for them. How are they going to recalibrate their business expectations from this country?
See, I think, all aspects of business, including high discretionary spends, the way I look at it and the way we are talking to our consumers and the way they say is that they're not going to reduce their quality of life. If you're used to a particular a Gucci or an Armani or Louis Vuitton, you wouldn't spec it down. You may defer a purchase of a discretionary nature, but you would not spec it down. So we do think that post a couple of months or 3 months, that would bounce right back. I also have another thing to add to this. It's very interesting to see in the malls side. Digital economy, the way it has been embraced. We suddenly have the food courts and parking, etc. We've gone digital. We've tied up with all the digital wallet players, and we've seen that the consumers have really taken to it so very easily. So what's happening is consumption, I agree, cannot be stopped. Quality of life is not going to get derailed. It may be that the discretionary spends can get slightly delayed, but it's going to bounce right back.
What about, okay, Harminder, go ahead.
Manisha, on the luxury, I add this point that the major growth for most of the luxury brands is not only from the people who continue to buy. The real growth for those people, because they are the ones who are at the highest end. So there are people who are graduating to that level. So 20 years ago, there were people who were graduating to using toothpaste in this country. So now there are few people every year, maybe 1,000, 2,000 families who graduate to Gucci. So I think that graduation, that's why I say the impact will be for an year. Year afterwards, so not quarter, but in luxury's case, if you go on that pyramid, I think that at the bottom I'm saying there is no impact. Even for a day, there was no impact. People were eating food every day. And the luxury level, I think it will be for an year that before really that growth really comes back.
Ladder, and as you get wealthier, Debashish, do you believe that at the end of it all, it's in larger GDP and growth numbers? This is perhaps we stand a chance of crossing that double-digit growth figure in 3 to 4 years, or maybe even, let's say, take another term of the Modi government and some stability. Is that a possibility?
Yeah, I mean, I'm more optimistic about the long term than I'm about the short term.
Yeah.
I think it's good that many of my panelists are optimistic.
They're more optimistic than you are,
yeah,
for
but
sure.
I frankly think it is too early to call. Many consumers, knowingly or unknowingly, feel there's a time of uncertainty ahead, as in demonetization is not the only thing which might happen in the next 3 months. All of us get these weird WhatsApp messages, even if 30% of them are true. There is going to be economic instability. Companies which are not going to do well up till March, they will give lower raises to their employees next year. So I'm not sure whether it's a very short-term thing. Neither am I sure very much that it's a very long-term thing. I think we just have to take every step at a time. Then combined with GST, this event itself has affected companies' supply chains.
Right.
Then companies are going to reduce production from January onwards because they don't know post GST what they have to print, what they have to do. So there's actually a lot of uncertainty overall, even from a availability perspective.
Got it.
So when you put things together, I think it's difficult to call. Maybe you should have this
So March is not when everything will start looking rosy. That's what you're saying. The call is difficult, not willing to read the tea leaves right now.
Yeah. For me, the big sentiment booster is if this whole move towards transparency actually gets the GDP higher, because more of the unaccounted for transactions become accounted. So there's a loss of accounted transactions and there is an increase in unaccounted transactions. If that is net positive, I think all of us will feel very good, but we don't know where that will net out.
Everyone's doing their own math calculations on the GDP. I'm going to wrap out here, Pushpa Vector and the gentlemen. Thank you very much for joining me. It's always interesting to know that, okay, maybe the headline numbers are looking a bit too scary. We don't know yet. So better end the discussion on a positive note and say, hey, look, at least the organized sector is likely to feel or at least see the worst behind it very, very soon, December end or March, not beyond that. And the unorganized sector will start falling. The pieces of the puzzle will start falling together, and perhaps the full picture will emerge by March, if not later. On the other side, a very interesting study on what do consumers or buyers really, or millennials really want when it comes to housing and real estate. Stay with us for that discussion.